Good morning, everyone. Trust we are doing good. Welcome to another webinar series that we've got for you. And the topic for today's webinar is 6 steps to managing risks. Okay, 6 steps to managing risk. If you can hear me properly, please do drop a hi or a yes in the chat box. If you can hear me properly, drop a hi, a yes in the chat box. Okay. Okay, great. Good morning, Linda. How you doing? Good morning, Chidume. Good morning. How are you doing? Yes, it's amazing having everybody on here. I'm glad everyone is on here. It's quite amazing. And yeah, today we're talking about 6 steps to managing risk. But before we begin, okay, um, I'd like to give us an insight into how I almost blew my trading account. Okay, thank God for risk management. That's how I didn't blow my trading account. So, it was like a year back now. I was trading, and I think the pair was gold. Yes, gold. Okay, the pair was gold, and I entered first. I will be candid. I over leveraged on that trade. Okay, I was like, yes, I'm a pro. I could actually catch all the moves gold wanted to offer that day, and I hopped into the trade with an inappropriate risk management model, and I entered first by over leveraging my account because of I knew leverage was free money, and also I over leveraged my account first. That was how gold started moving against my trade, and I didn't have a stop loss on, but I had to take profit. So it moved to a certain point. I got a margin call, and I was like, wow, my account has almost blown. What do I do? What I did was I had to reassess the trade while it was running. I had to reassess the trade, and I found out where my mistake was. Number one was the over leveraged account using the wrong contract size. The second thing was the fact that I didn't have a stop loss on it. And immediately I placed my stop loss, and it was now very tight. I couldn't give the trade the breathing space because I entered at the wrong time. I was overexcited and all just to catch the whole move good out to offer that day. But thank God I closed the trade at break even, and that was how I was able to save my trading account. And you don't get this type of luck every day in the financial market. You don't get this lucky every day in the financial market. So it's best advisable to always use a good risk management model. Plan your trade before you trade. Okay, so you can be able to trade your plan. Okay, plan your trade so you can be able to trade your plan. So you don't end up saying, I wish. There's no I wish in the financial market. Once you've lost money, there's no I wish. You can only learn from the lessons that made you lose money. Okay, so let's hop into today's event. I'm sure my story was quite satisfying. And at a good global market, what we do is basically we offer you access to trading the financial markets, the global financial markets, by giving you the platform to trade on. And we've got 3 platforms. We've got the cloud trade, which is the Naira trading platform where you can trade the global financial markets in Naira. And we've got relatively close to 1,000 financial instruments on our cloud trade platform, ranging from currency pairs to indices to commodities to stocks to futures also. Yes, bonds and all. We've got all of that on our copy trading platforms. Sorry, on our cloud trade platform, where you can trade all of these things on our cloud trade platform. On the MT4 platform, we've got about 500 financial instruments ranging from indices, CFDs, stocks, commodities, forex, that's currencies, and all. We've got all of that on our Naira trading, on our MT4 platform, which is a dollar trading platform. You can only trade the MT4 with us using a dollar account. Okay, and the last platform we offer is the copy trading platform. So I had this thing online that copy trading isn't good, this and that. No, no, not at all. Copy trading is good. Okay, copy trading is good if you don't have time to learn about the financial markets, if you don't have time to what's it called, if you don't have time to trade yourself. It's good for you once you know the right trader you're following, once you understand the risk involved with the trader you're following. It's one of the best platforms to hop on if you can't trade by yourself. Okay, so I saw that argument online. I was like, do these people really know what they're saying? Like, it's one of like the best platform that has liberated traders far back as I can remember. Okay, far back as I can remember, it has been liberating traders from, if they find it stressful to learn or trade financial markets themselves. The copy trading platform gives them a huge support by letting them copy professional traders trade and make money profitably, okay, and consistently too. So that's it on the products that we offer you at TV Global Markets. There is also more products on the way. I wouldn't want to leak any of those products, but just anticipate, okay? Anticipate real big. So let's talk about the last morning, Alimat, morning, Timothy, morning. Okay, so let's talk about the last. Let's talk about the last webinar that we had. Can anyone remind me the topic of the last webinar that we had? Anyone at all? Anyone at all? The topic of the last webinar that we had? Anyone? Okay, emotional control to successful trading. That's brilliant. That's brilliant. And if you noticed, or if you've been paying close attention, you noticed the webinar we had last week Thursday was about forex market sessions and how to trade them. Then the next thing that followed was your psychology when it comes to trading, okay? Emotional control when it comes to trading. And what is following after emotional control is risk management. You can see they all align together, like they all fall in place. It's like a track progress, okay? A progress walk to evolve you from what you, when you know how to trade, which is how to trade sessions, to emotional control, your psychology when it comes to trading, and now to risk management, to managing your risk. Like it's a workflow that puts you on track when you're trading, or to know the right thing to do on the charts. Okay, and I sent out the poll. Please, let's respond to it. Thank you very much. Let's respond to the polls. Thank you very much. Okay, so what did you learn? If you were on the last webinar, what did you learn from it? What did you learn from the last webinar? Emotional control, secrets to successful trading. What so far you were on the webinar? What did you learn from the webinar? Please let me know what you learned from the webinar. Let's know those that are following, those that actually go back to listen to the webinars, to take notes and to implement them. Okay, so what have you learned, or what did you learn from the webinar? Okay, anybody? What did you learn from the webinar? Okay, I can see a few people typing. Anybody at all from the last webinar? Anyone at all? Okay. Um, how to manage your emotions when trading. Brilliant, brilliant, brilliant. That's one of the things we discussed. Okay, so morning, Ayatollah. Morning, morning. So let's hop on to what we have today, which is 6 steps to managing risk. Can anyone tell me a step they use in managing risk when they trade? Okay, just share your ideas on a step you've used to manage risk. Okay, one step you've used to manage risk when you trade in the financial markets. One step you've used to manage risk in the financial markets when you trade. One step you've used to manage risk in the financial markets when you trade. Okay, I know. Stop trading after three. Brilliant. That's one step. That's one step. If you take 3 consecutive losses, just take a chill pill from the charts. Take a chill pill from the charts. Okay. Anybody else? One of those steps you use to manage your risk when trading. Okay. Anyone else? Any step you've used before, or you're planning to use? Yes, you could be planning to use a step and you've not tried it out before on the charts. Okay. Okay, I wait to see a clear direction movement on the charts. That's another one. Using 1% per trade. Okay, sell a lower high in a downtrend, buy a higher low. That's one. Those are steps like you used to manage your risk, used to manage your entries, used to manage what you're doing in the charts. Okay, that's brilliant. So in today's webinar, you learn how to determine your risk tolerance. Okay, you learn how to, or what your risk to reward ratio is. We'll talk about being cautious of the news, keeping an eye out. Also, we'll talk about customizing your trade contracts the right way. That's your lot sizing. We will also talk about determining your trade timing. And lastly, we'll talk about the use of stop loss for capital protection. Very, very key. Like, the most important on this chart, on this board, is actually using of stop loss. Okay, usage of stop loss for capital protection. It can never be underemphasized. It has to be overemphasized. Okay, because that is like one of the keys to managing risk the right way. Stop loss, using your stop loss. Okay. Well, I got notes for us today, same as the last class, but this is just to walk you through the process. Now, before we hop into determining your risk tolerance, now, can anybody tell me what they understand by risk tolerance? Like your own idea of risk tolerance. Your own idea of risk tolerance. Can anyone at all tell me what they understand by risk tolerance? What you believe risk tolerance is? Okay. And also, I sent the poll. Please let's respond to the poll. Okay. Thank you very much. Let's respond to the poll. Can anyone tell me what they understand by risk tolerance? What their risk tolerance is? Knowing how much you can lose that you won't feel bad. I love that. The level of loss you can stomach. Brilliant. Brilliant. How less challenged someone is with when he loses. I'll try to think of that. I'll try to think about that one. And anybody else? Anybody else? Okay, let's use a live example before we go to the notes. Okay, now remember, before you go to the supermarket to get something at the supermarket, there's always this stipulated amount you want to use to purchase whatever it is. Or when you go to the market also, there's always this amount you always tell yourself you don't want to exceed. Now that is just determining how much you will spend. It is relatively the same as determining your risk tolerance in the financial markets. Okay, how much you want to spend when you go for shopping, how much you want to lose when you go for shopping, because you know if you go to a store to get something, you are losing money. That's an expense. Like money is going out of your wallet, money is going out of your pocket. So I count it as a loss. Now, when you go to the financial markets, it just means the same thing. Okay, determining your risk tolerance is determining how much you're willing to lose in the financial markets. Now, I'll be candid with you. You read a lot of books about risk management and all, but every single book you read says 1 to 2% or up to 5%. Some even say 10% of your capital per trade. But the truth is, determining your risk tolerance is a personal choice for you being a trader. Okay, if you plan to trade on any financial instrument or any market, determining your risk tolerance is on you. Okay, now based on statistics, based on the books you read, based on almost everything, numbers like 1% of your trading account, 2% of your trading account, or up to 5% of your trading account is the total value of your account that you should be risking per trade. But should you really follow those books? Fine, these guys are professionals in the financial markets. They are the big dogs in the financial market that you listen to when it comes to advices. But should you really take account of these numbers? Okay, the answer is yes, the answer is no. It's a rhetorical question. Why? Because it all based down to your trading account balance, your equity. Okay, it all depends on the comfort you have when you lose money. Okay, most person might lose 10% of their account and they'll give up on trading. And lastly, it's also based on your experience level. See, I always talk about something in the Telegram group, which is your experience level, the precision that comes with your trading. If you are still at the learning level, don't try risking 10%, don't try risking 5%, just risk 2% maximum. Okay, maximum. Also, it depends on your trading account size. If your account size is small, okay, try risking less. Morning, Kelechi. Try risking less. If your account is big, try risking lesser. Okay, like if you've got $100 account, okay, let's say you want to give your trade a breathing space, this and that, this, just risk $3 per trade. And when you risk $3, just always know that your RR, your risk to reward ratio, we are coming to that, has to be greater than how much you're losing. That means if you're losing $3 per trade, know that on every single trade you want to make above $3, which is approximately an average of 1 to 2. Risking 3, you have to make 6 per trade. That's just the logic there. So your risk tolerance depends on you, depends on your account size, depends on a lot of factors. But still, the major thing is your comfortability. There are people that are comfortable risking 10% of their account per trade. That's good. That's amazing. That's what they want, but not what you want. Ask yourself this question. If you risk 10% of your trading account, I want to get a response in the chat box also. If you risk 10% of your trading account on a single trade, can you be comfortable taking a 8 losing streak? Yes or no? Will you be comfortable if you lose 8 times, 10% 8 times? Will you be comfortable? Yes or no? I want to get a response in the chat box. Imagine you are risking 10% per trade. You lose 8 times in a row consistently, like 8 losses constantly. Ask yourself, will you be comfortable? Will you be happy? Will you still want to trade? What has happened to your capital? It has gone down the drain. So the lesser the risk, the lesser the risk, the lesser the risk, the lesser the risk, the easier you can get back on your feet when trading. Now, still compare it to someone that is losing 5% per trade. If he takes 8 losses in a row, can he still get back on his feet? Yes or no? Compared to that guy that trades 10% per trade. If he loses 8 times in a row, can he still get back on his feet? Can he still get back? I'd like to get a response on that also. Okay, I'd like to get a response on that. I saw some people were typing and they stopped typing. Okay. Anybody else? The truth is, yes. The truth is, no. Sometimes that 5% is a lot on them and they fail to get back on their feet. They fail to grow their account back to what it is. And some people still feel comfortable. They still grow their account back to it. But now imagine those two guys and imagine someone who is risking 2% per trade. Okay, 2% per trade. If the person gets a loss of 1% or 2% 8 times, can he get back on his feet? 2% 8 times, can he get back on his feet? Immediately, like, can the person get back on his feet and start trading? Okay, I'd like to get a lot of response on this one actually. Okay, 2% 8 times in a row compared to those guys that lost 10% and 5% 8 times. The answer is yes, because he just lost 14%, while you guys lost 80%, while someone else lost 40%. This guy that has lost 14% has a better chance of getting back at the market. So that's just, you need to determine your risk tolerance as a person. You need to determine your risk tolerance. Okay, so on to the next one. Risk to reward ratio. What do we understand by risk to reward ratio? I'd like to get your bias on what risk to reward ratio is. What do we understand by risk to reward ratio? What do you understand by risk to reward ratio? What do you understand by risk to reward ratio? Anybody? What is risk to reward ratio to you? Okay, someone says the proportion of how much you want to gain against how much you're willing to lose. That's golden. That's golden. You get a 10 for that. Okay. Now, risk to reward ratio is simply risk. How much you are willing to lose. Reward. How much you are willing to make. Now, see, once you understand the concept behind risk to reward, it will greatly and definitely improve your chances of becoming a profitable trader in the long run. Setting stop loss and take profits is what protects your capital. See, if you are saying, I have a psychological, the market doesn't know your psych. The market doesn't care if you're using a heavenly stop loss. Okay, it doesn't care if you are using a spiritual stop loss. It will surely come to that level if it wants to come to that level. This is one thing I want you guys to know. Okay, there's nothing like psychological stop. Fine, you can place a psychological stop loss and market still comes there and you were not around when market got there. You lose more capital. Placing the stop loss won't kill you. Okay, it only helps you protect your capital the more. So in the long run, always set your stop loss and your take profit, because your stop loss is the percentage you are willing to lose. Your take profit is the percentage you are willing to make. Your risk to reward ratio just measures and compares the distance between your entry point, your stop loss, and your take profit. That's what it simply means. Okay, that's what it simply means. Once you are able to understand, or you have a stipulated, I have a constant risk to reward ratio I use. The risk to reward ratio is 1 to 3. If I'm risking 1, I want to get 3. I can adjust my 1. I can adjust my 1 to, I can adjust my 1% to whatever it is I want to use. Okay, I can adjust my 1% to whatever it is I want to use. And now you see this, the logic is the 1% I want to lose is based on my contract size. Now this is what people don't understand. Most people just say, because I have a $1,000 account, I will use 1 standard lot. Because I have a $2,000 account, I'll use 2 standard lots. See, all those things are just your mind playing tricks on you. Okay, your mind is playing a trick on you. The real thing is, you should be able to tether between your lot sizing, your contract size, okay, your trade contract, to fit the stop loss you'll be able to use, or you'll be willing to use to fit your risk to reward ratio. Okay, so it's not that because of you have a $50,000 account, you use 10 standard lots. No, make sure you are able to give your trade a breathing space. Okay, make sure you're able to give your trade a breathing space. If you want to lose 2% of your trading account, okay, make sure your contract size is adjusted to be able to give that 2% you'll be losing a breathing space. That is just the logic when it comes to risk to reward ratio. Now let me give you an example. If I have a $10,000 account, let's take it from there, and I want to lose 2%. 2% of my $10,000 I think is $200. Okay, let's just imagine it's $200. That doesn't mean I have to use 1 standard lot. If I use 1 standard lot, that means my stop loss will be 20 pips. Price can breathe beyond 20 pips. But imagine if I use 0.5 mini lots. Now my trade can have a breathing space, and I'll still maintain the same RR, the same profit, although the profit won't be the same, but the loss is key. It's keyed at 2%, and still giving my trade more breathing space. That's just the logic. That is just the logic. Okay, so before we proceed, do we understand the concept or the idea behind determining your risk tolerance and risk to reward ratio? Yes or no? I'd like to get more response. Okay, I don't understand. I don't like the word somehow. Do you understand? It's a yes or no, okay? If you say no, just point out what you don't understand and I would explain again, okay? The word somehow doesn't fit in. Okay? Now, let me break down risk to reward ratio in another word. Let's say you own a store, you sell clothes, okay? If you are risking 30,000 naira to buy clothes to sell in that store, you know, you're buying those clothes, you don't know who will come for those sizes, who will buy, or who will do anything with those clothes. You don't know who's coming to buy. You've risked 30K to put goods in that store. You should be expecting 2 times your 30K or profits above your 30K, because you have to consider the stress, the traffic, the everything in making money. So that's just risk to reward ratio. 30K has been risked to buy a certain amount of goods in a store. You are expecting to make a reward of 2 times that 30k, which is 60k. That means if you bought a shirt for 500, you'll be selling it for 1,000 naira. If you bought a jean for 5,000, you'll be selling it for 10,000 naira, or a bit lesser than 10,000 naira, but not that same 5,000 naira. Do we understand the logic behind risk to reward ratio now? Yes or no? Okay, so to the next one, which is be cautious of the news, keep an eye out. I can't under stress on this. I have to over stress on it. See, news, it depends on how you view fundamentals in the financial markets. Okay, it depends on your thoughts on what fundamentals is. Okay, fundamentals, which is news as you know it, okay, can affect your trades positively or negatively. Okay, you need to always keep an eye out for these events. Okay, you need to always keep an eye out for these events. You don't know what will happen to that report, and I'll show you something that happened yesterday. So yesterday they read FOMC minutes at 7 p.m. I want you to go to your charts right there, go and check ERUSD, check GBP USD. What happened yesterday at 7? Okay, at 7 o'clock yesterday. 7 o'clock yesterday. Check what happened to ERUSD. Right there. 7 p.m. yesterday. Check what happened to ERUSD. Use the 15 minutes time frame. You see better on the 15 minutes or the 5 minutes time frame. You see, it created a very bullish candle. Very, very bullish candle. Very big bullish candle before it now closed bearish. That's reaction of price. Now imagine you were in a trade and you were selling. That move to the upside would have sent you back, like way back in the loss. So you need to always keep an eye out for these events. I'm not saying it's not good to trade during news events. Okay, depends on your school of thought when it comes to the financial markets. But when an event is very, very hyped in the financial markets, you don't want to keep your trades running during those events. And sometimes you want to place trades during those events to get the best of the markets. It depends on your school of thought, like I said. Okay, so news events can be particularly perilous for traders who are looking to manage their risk well. Okay, managing risks during a news event is like you're going to a casino. Okay, you're going to a casino to gamble. You will not manage it the right way. You can never manage your risk properly during a news event because you don't know what the news event might do. It might go up 1,000 points and drop down 10,000 points. You would have been in profit and you see the next minute you are in a loss. Okay, certain news events like employment or central bank decision or inflation rates can create great, okay, I'm supposed to use the word great there, okay, great abnormalities in the market. Okay, it can create abnormal large moves in the market that can create price gaps. Yes, there was one time, I think that was last year or last 2 years, I was trading during the what's it called, the UK elections. Yes, that day GBP, let me check the charts. I'll give you the dates to go and check. I'm checking the charts right here. Okay, GBP flew to the upside. Okay, went to the upside. I think 500 points. Yes, 500 points. That just that evening. GBP USD. Come on, let me check my charts. Okay, it went all the way up 500 points. I'm coming. I'd have to like go and check the dates. Okay. Okay, I'll check the date and we'll confirm that later. Okay. When John Boris was announced, 2019. It was 2019. Okay, check 2019 your charts. 2019 when? I just know it was 2019. July 2019. Okay, check your charts. July 2019. Yeah, July 2019. You see how all GBP flew that day to the upside like 300 points. Okay, check on your chart. You'll be able to confirm that July 2019, when all GBP pairs like they skyrocketed to the upside. Now, customizing your trade contracts the right way. How do you customize your trade contract the right way? There's a lot of ways to customize your trade contract. That means to set a certain lot size you'll be using. Okay, a certain amount of a commodity or contract size you'll be buying in the financial market. There's a lot of ways. There's something called position size calculator. Okay, you can get it anywhere online. You can check your app store, you can check your Play Store, you can check on Google. Okay, position size calculator. That calculator helps you to calculate your position, which position or which lot sizing you should be using. It helps you calculate it. You put in your balance, you put in your risk, you put in what you're looking as a reward per trade, everything there. Once you put in there, it's going to calculate the right position size you should be using. And what I do is whenever I calculate the position size using those platforms, I still divide the position size by 2. That means if it gives me one standard lot, I want to use one standard lot because I know that my stop loss is not a constant price. Okay, it's not a constant 30 pips, although I use constant 30 pips because of the way I trade. But I know sometimes it can't be 30 pips. Okay, it has to be more than sometimes. So I slice it by 2, which is giving 0.50, and I trade that way. Okay, so the right contract size for your account is key, very, very key. Many people have small accounts and they still use huge contract size due to the fact that they want to make money real quick and they end up over leveraging with the wrong contract size, then lose money. I will tell you the truth. See, the right contract size, even lower than the right contract size, will save you from a lot of stress, hypertension, or blood pressure. Okay, I'll be candid with you guys, because when you see you're trading a loss and you're getting margin call, you're not comfortable. And that's because of you use the wrong lot sizing. Once you use the right thing, there's no need for you to be fearful. You'll always be comfortable on any trade you place, be it profit or loss. And using the wrong contract size on the wrong account balance will lead to over leveraging. And you don't want to over leverage because you lose money. You lose money when you over leverage. Now, you don't want to lose money. You have to use the right contract size. Okay, you have to use the right contract size, and the right contract size is determined by your account size. If you have a small account size, start with a small contract size. If you have a big account, vice versa, also start with a big contract, not really big, okay, not really big, but an appropriate contract size for that your account. Okay, so we've been able to cover 4 out of the 6 steps to risk management, and so far so good. Do we understand the 4 we talked about? Yes or no? Do you understand the 4 we talked about? Yes or no? I've been waiting for response. Okay, I just sent out the poll. Please let's respond to the poll. Okay, let's respond to the poll. Honest reviews on the poll. Okay, brilliant. So far so good. Are we all following? Do we understand the 4 things we've talked about? Determining your risk tolerance, risk to reward ratio, be cautious of the news, keep an eye out, customize your trade contracts the right way. Do we all understand? I'd like to get more response actually. Okay, so to the next one, which is determine your trade timing. You see, most people think they don't need to determine when they want to trade, like the time they want to trade, this to that, because they feel they are greater than the markets, they are better than the markets and all. But the truth is, there's one thing the markets will always do. It will always humble you. It will always humble you. It will always humble you. And remember, when the market humbles you, it takes money away from you. Once it humbles you, it will take money away from you. That's why you need to know what time is the best time for you to trade. Now, there is this thing I always say on Telegram channel: time and price. It's never price and time. No, time and price. We talked about trading sessions and how to trade them. Okay, we talked about trading sessions and how to trade them. I said during Asian session, okay, during I've got my notes here, and if you have your notes there also, you remember I said during Asian session, AUD, NZD, and JPY pairs tends to move the most. That is time, then price, okay? Because you understand during this time, these pairs have a tendency of moving in a certain way. These pairs have a tendency of moving in a certain way. London session, I said EUR and GBP pairs will move a certain way. Okay, that means you understand London session is a time. These pairs are price. They have to move a certain way. Same as New York session, I said major pairs will move a certain way. That is it. Okay, know what time it is you should be trading. Knowing about trading sessions will help you better yourself when and how you should trade. Okay, knowing when and what pairs move during a particular time will give you an edge over the markets, and you'll be able to manage risks properly and make profits also. Okay, you'll be able to manage risks properly and make profits also. What time is it? It's time to trade. Once you know the right time you should be trading, you would understand what you should be doing at that moment and how you should be managing risk at that moment. Do we all understand what we just explained when it comes to determining your trade timing? Okay, so you can see the image of a clock and money. Time and price will be equivalent to profits in the financial markets. That's just the logic to it. So using stop loss for capital protection, which is the last thing we have on the list. Now, before I go deeply into talking about stop loss for capital protection, let's take a look at that image that we have down below. That's a pipe and it's leaking. Okay, the pipe is your trading account. The leakage is your balance in loss. How do you protect it? You have to put something that will cover that area up. Whatever will cover that area up is your stop loss. It protects your account from leaking more. That's just the logic. Okay, whatever you use to cover that area is your stop loss. It protects your account from leaking the more. Let's dive right into stop loss for capital protection. See, stop loss is an order, and it's just an instruction to us that if you place a trade and when the price or the markets go to a certain level, it should close the trade for you once it's against you. Okay, that's what the stop loss order simply means. The stop loss order tells us, your broker, to close your trade if the trade goes against you by a certain amount, and the benefits of using a stop loss can never be overemphasized. Okay, using a stop loss has a lot of benefits. I know some people say, when I place a stop loss, price will go and hit my stop loss before moving in my direction. The question, that shouldn't be the question at all. That should be something for you to understand, or for you to realize that why is it that every time I place a stop loss, it always hits my stop loss before going in my direction? You need to readjust the process you are taking towards applying your stop loss. That is the thing. If you are using 30 pips before, try adding 10 pips to it. Try going down to a lower time frame to see if your entry is at the right point. Exactly. Kelechi just said the right thing. Morning, Daniel. I'll respond to your question in a few minutes. Okay. You just guess that this is where. No, you don't guess about stop loss. Okay. That's the wrong thing to do. You don't guess. This is where. You don't guess. You know this is where your stop loss should be. You don't guess. Guessing is different from knowing. Guessing is very, very different from knowing. Most people guess where their stop loss should be. Real traders know that this is where their stop loss should be. One of the greatest tools you can use to protect your capital is a stop loss order. when you put a stop loss to your trade, that means you're saying this is where you are, this is the last point you want to put your money in this trade. If it gets here, I'm okay with whatever happens in the market. That is just the key thing. That is like the most important thing when trading. Now, the bottom line, which is the end of this topic, although you don't need to leave the meeting, we'll still talk about other things. The bottom line is everything we discuss should be put into consideration when managing risk to avoid loss of capital. It is easier said than done. That's one common, I don't know if it's a proverb or it's just a quote. It's very easy for me to say all this thing. It's very easy for you to say, yes, you understand. The most difficult thing is application, applying it. That's the most difficult thing. The most difficult thing is applying it. See, it's not about coming to my webinars. I say this a lot. It's not about coming to my webinars every time. It's about when you come, are you applying the things you learned? When you come, are you applying the things you learned? When you come, are you applying? That's the major thing. Okay? That is the major thing. That is the major thing. Application, key. Application, key. Very, very key. And that brings us to the end of today's webinar. Okay? I'm now open to taking questions. Okay, I'm open to taking questions. So you can ask your question in the question section. I gladly respond to it. Okay, I would gladly respond to your question. I gladly respond to your question. Anyone with a question, please ask your question. I'm open to question. It's at your end, Michael. It's at your end. Okay, it's at your end. No, yeah, I can see my mic is completely plugged in. I can hear myself also, and it's loud and clear. So I think it's from your end. So questions, you can drop your questions in the question section. Sending out a poll. If you are not a client of Eagle Global Markets, please go to access.eagleglobalmarkets.com. Okay, access.eagleglobalmarkets.com. Okay, access.eagleglobalmarkets.com to get an account, a trading account with us today. Okay, access.eagleglobalmarkets.com. Okay, so I'll be sending out quite a few polls. I just sent out a spree of polls. Okay. So we can all respond to the polls. Okay. So, wow, I thought I was the only one that saw it. Let's check the charts. Let's check the charts. Okay, let's check the charts. Now, I'll share my screen in a few minutes. We check DXY but I won't take questions before I go to the charts. Okay. If you've got any question, please drop your question in the question section and please let's respond to the polls. Okay. Like I say, you can't pay me for my time. Okay. So the only way you can pay me back is by giving a honest review in the polls. Okay. Respond honestly. If the webinar is bad, say it's bad. If you didn't learn anything at all, say you didn't learn anything. I would personally inquire from you why and how. What should I change in the process? How should I go with the process? How should I go about the process? Okay, so please ask questions if you have any question. Yes. Okay, Temitope, I would gladly like you to tell me the name of your account manager. I would reach out to you through your account manager. Okay. Okay, so I'll share my screen right now. I'll share a chart right now and we'll look at DXY together again. Okay, so I believe I made a bit of a mistake when I was talking about DXY in our last webinar. Okay, I made a bit of a mistake. I'm in GU longs. I dropped accumulation, manipulation, and distribution. Well, I guess I was manipulated too. Okay, so because I had my stop loss a bit below this low and I was triggered out, so well, it happens. So let's go back to DXY again. I was expecting this to hit this other block and come down, but it didn't. It just went all the way down. So let's go back to DXY again to see. All that I will attend to you personally. Let me talk about, okay. Okay, what I will do is I'd like someone to drop the Telegram link, the channel, in the chat box, so those that are not in the Telegram group can join the Telegram group. Okay, I'd like someone to do that for me real quick. The link to the Telegram channel or Telegram group, sorry. Okay, let's run the Telegram group up to. I sent you a message. I sent you a message. Check your inbox. I sent you a message. That's the link to the Telegram group. Okay. Any other question before I go to the chat? Okay. Any other? Okay. Any other question before I go to the chat? What is DXY? DXY is dollar, okay, dollar index, like dollar, okay, just dollar index. Dollar index. GU is GBP USD. Like we call them in short terms to just feel how would I put it? To feel current, okay, current. You know, it's quite doesn't make sense when I start saying the pound and I just say GU, that kind of stuff. Stop loss order and stop loss are the same thing, just the order that is different. Like order means you're telling us to close trade. That's what your stop loss still means. Close this trade if it goes the wrong way. DXY is dollar, GBP USD is Great British pounds against the United States dollar. Okay, so let's hop into the charts real quick because we don't have. Okay, let's hop into the charts and let's see what is happening on GBP USD. I gave a response to you, Phillips. I said, check your Telegram inbox. Okay, I responded there. So let's take a look at DXY again. Okay, DXY. Let's take a look at DXY again. Now we'll calmly check DXY. Okay. Now, looking at DXY, we said we want to understand where price is coming from. We said we had this high right here, which was like the highest point in price, and we had this consolidation here. Okay, so we had expansion and correction. Okay, we had expansion and correction. We had expansion and correction. Now, looking at this, all we can see from this is that price is coming down. Okay, price is going to the downside, and we are stuck here in price. We are stuck within this range low and this range high, and this previous high was acting as a what? A order block. So it's acting as an order block. Okay, so the mistake we made, or I made, okay, was I was looking at DXY from the daily time frame, okay? Because this right here would have been a break in market structure on the daily time frame. But I totally missed out the fact that I needed to put into consideration what the weekly time frame was doing. So what I thought was from the daily time frame, which was this, I thought structure had broken and changed bullish, okay? But generally, we were bearish. All we were doing was just trading within this range of price. All we did was we were just trading within this range of price, okay? So if we take a good look at what price is doing now, look at what price did. Price just corrected back into an OT level, which was a previous order block level. So I can delete this right now. And basically, I know DXY is bearish. Okay, that means dollar is bearish. And we need to take out this old low, yeah, and this old low, yeah, then this old low, yeah, because we are generally bearish even from the monthly time frame. We've tested into this order block, okay? Now, to daily time frame, now we have a small fair value right here. So these bullish candles were serving as a bearish order block. And look at what price gladly did. Price just went into it yesterday and we expected bearishness in the dollar, okay? Now, looking at this area, we have a fair value gap right there. We expect price to fill it to the downside, okay? We take these lows, we take these lows. We know we are generally bearish on DXY, okay? And if you look at this right here, this is SMT right here, SMT. That's a divergence in price, okay? This is basically SMT right here. So we know if we check the lower time frame, we've broken market structure, but we've not broken market structure to the downside, okay? If this area breaks, then I might be saying DXY is bearish on lower time frame. But for now, it's still bullish on lower time frame, which is what we all expect price to do, okay? Price can't be overall bullish on all time frame, okay? If price is bearish on weekly and daily, the lower time frame will be bullish, which is just meaning that that's the correction for price to trade lower. Now look at this high, right? We had stop hunt. We had stop hunt in price. So what we might be having is, even if price trades lower, we might be having or seeing price have to trade back into this order block here for lower prices, okay? Back into that order block for lower prices. It might be more possibly next week, okay? Next week will come and form high of the week within this region, then go down. So now on the 1 hour time frame, we can see market structure had broken. So we mitigated here, but I still think price might go higher next week for possible re-entry. For those of us that missed this major sell, we can get re-entry next week. So DXY, we've been able to confirm that it is generally bearish, okay? Now, why is GBP USD misbehaving? Let's go to GBP USD. Now, the thing is, ER USD is cooperating. It's cooperating. So I was in ER USD buy. I got my buy entry here. I left this morning when it took out this high. That was like a few moments back. I left this morning. I need to have hit my take profit. So like this was some sweet. How many pips profit? Let's see how many pips that was. I got entry on this week and to this high. That was like 41 pips. Only low hanging fruits. Only low hanging fruits. I'm not willing to hold my trades for long term. So let's check GU. Why is GU misbehaving? Now, the thing is, you have to understand that GBP on its own is one hell of a pair, okay? It's one hell of a pair. So why is GBP USD misbehaving? Like, why did it hit my stop loss this morning? The reason is because of, let's go to the weekly time frame. Now, the reason GU is misbehaving is because of everybody thinks GU is bearish, okay? So there are some retail traders that have, or there are some traders uninformed that have funds also to push price, but not as much funds. So this is what happened. We are generally bullish on the weekly time frame. Expansion, correction, expansion, correction, expansion, correction, expansion, correction, expansion, correction on that bearish candle, expansion, correction, expansion, okay? Then correction. Now, let's look at this right here. You would agree with me that if I take this high, price only broke it by a few pips. Okay, look at it right there. Price only broke it by a few pips. So that's a new higher high. But look at what we had here. We had price form some sort of small short-term trend within this. So this is like the short-term trend is bearish. Like market structure already broke the short-term trend, which is one reason why price is trading lower. But it's a short-term trend. Remember, it's for the uninformed people. But we that we are informed, we know price has something to do here. That is why it came here. And what the price had to do? Price just had to come and take out these lows right there. Okay, that was what price did. But once you took it out, we were expecting higher prices, but we still didn't get higher prices. Why? I'll let us all go and figure that out. But look at this right here. We have a low right here. Okay, and now if we take our Fibonacci from swing low to swing high, we can see we've rejected at the 78.6 fib level multiple times. Okay, that's like there's something going on within that level. It's like a heads up that there's something going on within that level. So we can go to the daily time frame now. On the daily time frame now, why are we rejecting that level? I can delete this and I can reset my charts to this. Great. Now, why are we rejecting that level multiple times? Why we are rejecting that level is because of there is an order block on the daily time frame there. So see right there, that's it, right there. But since we've tested that order block, are we not supposed to buy away from that area? Yes, we are supposed to buy away, but remember the order block has been tested previously by this candle. So any other block we are looking for is going to be within this bullish candle. And this is like, now you see like I said, the dollar DXY has an SMT to the upside. Okay, this is a divergence. Look at what the GBP USD has. GBP USD has the same thing, but to the upside. Remember, dollar on is like this. Dollar on is like this. GBP USD is now like this. So you see, this is like just a mind game. Okay, just a mind game telling you that there might be a shift in market structure. So what do I want to look for? I want to go to the 4-hour time frame to go and see reasons, which is that candle I showed you guys. This candle, that week on the daily time frame. This is it right here. So what I'll be doing is I will be adjusting the order block into this level. Now see how price reacted off it. Another thing I can do is I can show you that there's more to price. This is just a shift in market structure right here. Shift in market structure right there. Okay, this is telling me that price has a reason to go very, very bullish. This is when you now see fundamentals. They will now start saying it was moved because of a certain person was talking. It just has to go higher. That's the way it has to go higher. There's liquidity here, there's liquidity here, and there's liquidity down here. So to the 1-hour time frame now, the reason they are not pushing GBP USD is just due to fractional disparity. Now I've explained what fractional disparity is. They need to move one price before moving the other. You see, when GBP USD start moving, the dollar will not be able to move the way it is moving. Okay, the dollar will not be able to move the way you expect it to move. Just be happy that dollar is moving bullish now. Okay, be happy dollar is moving bullish now. Now, why do we have to come back to this low? We had to come back to this low is because of we have an order block here. Okay, but still we haven't tested the order block, so we still come down because these are clean lows right here, clean lows right there. So we still come down into this order block before going up. That's just the simple reason why G is not buying. So that accumulation, manipulation, and distribution we saw this morning, it was just it was not ready. Let's just put it that way. It was not ready for buying. So that's why we are still trapped with a stop loss there. But still, we understand it has to go higher, which it will have to do sooner or later. I was in profit before, but in the end, it ended in a loss. So that's just it. Losses are inevitable in the market. Losses are something you can overcome. Let's check USD card. Remember, the last webinar, you'll be anticipating a sell on USD card, and all of us took a stop loss on the trade. My first trade took a stop loss. The second one also took a stop loss. Even though the second one went into profits, I could have closed and recovered the loss from the second one, but I felt it was still coming down, which, well, it all ended in a loss. So I can delete that mark out, and let's go to the weekly time frame also. So what happened on the weekly time frame was we were all played, okay? We were all played by price. We were bearish, okay? We were bearish, or we are still bearish, okay? Expansion, correction, expansion, correction, expansion, correction. Small bit of trend right here. Correction, expansion. This is a deep correction. Now look at this deep correction. Okay, look at that deep correction. We have a order block here. We had an order block here. So what we were based off on the last time we analyzed was this breaker block here. This is what we based our trade off, the breaker block. But now we are using the order block. And also we are trading within a range. Okay, this was the last high. And this was the last low. And if you look at those lows properly, they are just clean lows, like they are clean lows, clean stuff, which price needs to trade back into. Okay, and also we have fair value right here. Fair value in price. I'll go through the charts once I'm done with the chart. Rhymes, big rhymes. Above that OB, there is liquidity there. Look at it properly at your end. It has been purged. Okay, look at it properly. It has been purged. Although I could be wrong also, but with this bullish candle, with this bearish candle, this candle that went traded high of the week and went down, it purged the old liquidity right here, like this slant liquidity right there. It pushed it, but still it could still decide to go higher. But remember, DXY is bearish, so USD card has to sell. All the whole logic is based on what DXY is doing right now. So to the daily time frame now, you see what I mean. You see what I mean on the daily time frame now. This is the OB will be based off. Look at where this bearish candle started going down. It was at this order block right here. This one right there. That was where we went down from. Also, if we go down to the 4-hour time frame or something, you see that this high, exactly this high right there. Trying to get this picture perfect. Right there, we didn't even get to it, Seth. We didn't get to it, so we might be seeing some sort of okay, we touched it. Wow, we touched it. That's a one for us. We touched it and we started going down, but still I might be staying out because this high right there looks like liquidity to me right now, although we already pushed everything that is here. So we might see a reason for it to just drop down, because this is also liquidity right here. Okay, there's also liquidity right here, and this is also liquidity right here. So what we did was we went for we delivered to the upside first. There's also liquidity right here. So what we did was we delivered to the upside, took out stops. Now we might be looking to go to the downside, few fair value, grab those lows, liquidity right here also. But I could be wrong also, but I'm bearish on USD card. So DXY still has to go down more, and GBP USD, you still play with feelings more before deciding to go to the upside. Okay, wow, see what happened. Wow, we're talking about this order block here, that one, and look at what we had from it. We didn't go to it, but we had a rejection. So what I think this is a stop purge, and we might go higher. Then you now see them coming back to test this bearish candle. But that's just my thoughts though. I could be wrong also. And yes, this brings us to the end of today's session. I believe we all learned a thing or two from everything we discussed. In the end, thank you for attending the session. I wish everyone good luck and good trading. Thank you once again.